Okay, so the noise is much. Okay, I'm going to change my position right now. Okay, you guys just give me a few minutes, eh? Mr. Balogi, you're welcome. Good evening. Let me change this background.
My lesson has started, huh? I'm sorry, you people. I've got to leave you. Listen, I've got to listen. Listen. Continuously learning. Don't want to stop.
Just give me a few minutes, please.
Silence. Je will send my class to remember to avec. I need to have no phone.
Please, my friend, can you carry this thing to that part for me? Let me to that other side. That bucket. This way there's noise. They are disturbing me. All right, can you guys hear me now? If you can hear me clearly, please, can you type yes? Is the background better now? Okay. All right, good evening, ladies and gentlemen. I'm actually doing this presentation outside on my home. That's why you're seeing me struggling with this network. How many of us made some money today? How many of us made some money today? I want to see people made money. How many of us made money today? Before this trade, before this webinar, I just posted, okay, Shama said, hey, I made good money. Oh, Barrow, that's good. That's good. But demo, Shama, no problem. You found your account, don't worry. But demo, oh, Obaho said I made good money. That's good. Oh, Balogu said today is great, we are great. See, traders, there is one thing I want to make you guys understand. Trading is a very, very, is more of a emotion than skill. So as traders, we need to learn how to manage our emotions when we are not making money in trading. Today, I felt very bad how one of us, Mr. Austin, how he lost money based on the fact that binary was not uh, binary made a mistake, or they had issue with their program, their network, that they had to make his trade even when it wasn't close to the entry point. They had to execute the trade like that, and he lost some money. I felt so very bad about it. But apart from that, trading is a very emotional thing. You need to learn to control your emotions. Today you make money, tomorrow if you don't make money, don't feel bad about it. It's part of the trading. There is nobody in the world, nobody, quote me anywhere, there's no professional in the world who will come out and say, me, I'm a professional, I have not lost a trade. There is nobody like that. Everybody lose trade sometimes. Even the best traders in the world sometimes lose. So the day you don't lose, please do not be angry. Take it, learn something from that particular day, and then you join again next time, or you trade again next time. So I want to encourage you to keep on learning. I want to encourage you to take this as a goal and focus on this goal, because the reason why most people don't make it in life in anything is lack of concentration. You can't be doing so many things at the same time. Now you have made up your mind to become a trader, so the attention should be given to this skill. Don't be like people who learn today, they don't learn tomorrow. You can't achieve this result. The reason why I'm able to analyze trades and call it trades the way I'm calling it because of dedication. For the past several years, I have been dedicating myself learning this skill. There is no day will pass that I have not learned something about trading. No day. Every day is either I'm reading books about this trading, or I'm watching a video like the way you're watching about trading. So let's learning every single day be your problem. I mean, let it be that learning about this skill, reading about this skill should be your major problem. Don't rely on the signals you're seeing me sending to you. Those signals will never make you become comfortable, will never make you become rich in this business. Because there will be a day I may not be sending you signals. The key is for you to learn this skill, dedicate yourself to be learning it, commit yourself to be learning it. Tell yourself, I will not stop no matter what. Have that kind of mindset. I will keep on doing this thing no matter what. The reason why some people don't get it right because they give up early. But successful people, they don't give up. They fail. They dust themselves. They start again for another day. But poor people, on the other hand, they don't have the staying power. Most people don't have the staying power. They will do something today. They don't see instant results. They will say this doesn't work. Don't come here and think that you get rich overnight through trading. That kind of mindset will not make you rich. The key to your success in this business is every day keep on keeping on, keep on keeping on. Then don't give up. You may pass through some difficulties. I pass through all that. Sometimes you lose money. Sometimes people will be thinking you're wasting your time. Sometimes you may not even have money to fund your trading account. Sometimes you may not even have money to buy data. Those are initial challenges. Sometimes you may not even make money at all at all. It's normal. But the key to your success is never give up. Tell yourself, I will never give up, no matter what. I will not give up. If you don't give up on this goal, you keep on working on it every single day. I I can assure you that in the next 2 years, you'll be telling yourself, thank you for making a decision like this. You'll be telling yourself, God, look at what you have done to me. It is not going to be immediate success, let me tell you that, but it's going to be gradual success. So the day you don't make money, don't feel bad. Come back and try again. Thomas Edison failed 10,000 times before he was able to invent the electric bulb those days in America. Winston Churchill, the former British Prime Minister, said, success is going from failure to failure without losing enthusiasm. Don't let those people that will say no to you, that will doubt you, that will think you're wasting your time, to stop doing what you're doing. Keep on doing it every single day. Tell yourself, I will be doing this thing for the rest of my life. Tell yourself, I will do this thing no matter what. Have that kind of mindset. That kind of mindset of I will do it or die. You have that kind of mindset, trust me, you will succeed in this business. There was a warrior. I read a book, a book about a book called Think and Grow Rich by Napoleon Hill. That book is a very phenomenal book. I want you guys to take advantage of those books to help you to keep your spirit going. In that book, Napoleon Hill talked about a warrior that took his soldiers to a particular country. And when they got to that country, he told everybody to evacuate the ship, and then he unloaded them into that country, and he gave an order for them to burn the ship that brought them to that country. They are supposed to fight with people in that country, and he told them, look, now you can see that the ship is in flame, meaning that we don't have any other route to go back to our home. So here in this country is either we finish them or we perish because there is no going back. You know what happened? They all won. That the same thing that applies to life. Life is never giving up spirit. You have to tell yourself that I will not give up. No matter what. Whatever happens along the way, I will not give up. If it is even one single soul who has made it in trading, only one person in the world who has made it in trading, then you can make it too. There is no difference between you and those professionals, you and myself, or you and those people you are looking up to. You have the great potentials in you. You have the power in you, and you have to believe that you have such power. So the key to unveiling, to revealing that genius in you is continuous learning. Every single day. Read books. Read books. Let your mind be programmed for success. Listen to something positive every single day. Shut off the television. Minimize the way you play with people who are not going nowhere in life, because their friends will shape who you are. The person you associate yourself with matters a lot. I don't have friends. You know why? Because most people don't have a direction. And I don't associate myself with people who don't have direction. My friends are the people, you are my friends. You are my brothers and my sisters. I prefer having you as my friend than people who are going nowhere with me. Because you and I have the same mindset. You and I have one goal, one direction that we want to become great in life. So make friends with people you can grow from, you can learn from, you can get something from positive. Not friends that are complaining about the government, about their rich uncle, or about their parents. Ladies and gentlemen, we are going to go into the training right now. This is purely basic. If you have not heard anything about Forex, this is just the beginning of Forex. The topic is about candlestick and pending orders. All right, so let's go into the training. I hope you can hear me clearly, very, very clearly, and see my screen clearly. Is my screen clear, please? All right. Thank you. Thank you. This market has turned. Okay, so we are going to be talking about candlestick. What is a candlestick? What is a candlestick? Let me give you a slide about candlestick. When somebody said candlestick, what is that candlestick all about? Candlestick, Japanese, they are called Japanese candlestick. Japanese candlestick. Let's look for, let's see these candlesticks. How do they look like? This is what they call candlestick. And candlestick is very, very important in trading. If you're trading and you don't know all these candlestick patterns, you cannot make it in trading. So it is very important that you understand what candlestick is all about. This candlestick shows you the direction of the market, where the market is going to, and how tonight the reason why I entered that trade because of a candlestick formation. So if you don't understand all these candlestick formations, you will not make it in trading. So candlestick tells you the movement of the candle candlestick tells you where the market is going, how the market will be in the next few weeks, in the next few hours or few minutes. So we have types of candlesticks. So let me just tell you how they are formed. Look at this now. This one is a bearish candlestick. It means that this one is a bearish candlestick. That means that as it is showing red, it means that the candlestick is called bearish. Bearish. Whenever you see a candlestick that is showing red, it is a bearish candlestick. And look at how it starts. It opens from here for a bearish candlestick. Some people color, this is just the coloring, but most of the time, most people color their candlestick in red or green. Meaning that when it is in red, the price is going down. When it is in green, the price is going up. What you're seeing, this long thing, is called wick. This long thing you're seeing is called wick. Look at it, means that the price it opened here. Sorry, for a reddish, for a bearish candlestick, it opened here. It went up a little bit, but later it came down. It came down to this side, but came back here and closed. So this is the lowest it got, and this is the highest it got, and this is where it closed. Anytime you see this wick, this long thing, tiny called wick, some people call it fake out. Anytime you see a fake out, it means that there was once price was here. So in this scenario, price opened here, came down here, then it now retraces back and close here. So this is called wick. This is the body of the candle. This is the body, this is the wick. For a buy, it opened from the down, right? As it opened, it came down first. That's why you're seeing this wick. But after coming down, this is the low it got. It now moved up to the high side, up. But instead of closing here, sellers push the price down eventually close here. You can see how these things are. So this is called the bullish candlestick, or it is also called uh, uh, this is called bullish. Why this is called bearish? When the trader say today's market is bullish, what that trader is actually saying is that the market is actually good, and the price was going up. When the trader say today market is bearish, what that trader means is the market was actually going down, that it was not a good market. All right, let's go to the next. Look at this candlestick. This is another candlestick formation that is very, very important. This candlestick opens from here. It opens from here, and this whenever this candlestick forms, it gives you a very strong signal about the market. This is, some people call it hammer, or you can call it kangaroo tail. In the Naked Forest book that I gave to you, you know that this is called kangaroo tail. So in this particular candlestick, it opens from here, but it came down. It was going down as if it was a down movement. But later it came back. Buyers pushed the price upward. It came back and closed here. This is the highest the price got. Whenever you see this kind of thing on a zone, those of you who are new, you may not understand what is a zone, but when you see something like this is an indication that price is going to go up. So you are going to be thinking of buying. It is a sign of a buy. Sometimes it could be red, sometimes it could be green. Sometimes it could be red, sometimes it could be green. Look at it. Why it is green like this? It means that price open here, went up, then I came back down here, and then close here. So you may see it like this in green, or you may see it like this in red. But what's the most important thing, that it must have a long tail. This is called wick. Whenever you see something like this, it's a clear direction that the price, yes, the color does not matter. The color does not matter. This red or blue, green does not really matter, but it's a long tail. When you see a long tail, you should know that this price is a buy. This is a buy. So you have to place a buy after this formation of this candlestick. Let's look at them again. Look at them again. Long wick. A long tail on the bottom part of the candlestick tells us that the market made a significant fall, then quickly retreated from this price level. This is often seen as a bullish signal. The same thing to this one. When you see a long tail like this, it means that price may likely go down. So what you need to do is to place a sell. So you sell this market. All right. They are saying here, the wick. When you see something like this, it is a sell. When you see something like this, it is a buy. I'm going to show you how it works on a real time. Then there's what we call engulfing candlestick, bullish engulfing, bearish engulfing. What that means is that this one is called bullish engulfing. It means that the candlestick completely engulfed, that is, it's bigger than the one that printed earlier. And when you see something like this, it means that the price is going to go up. So you place your buy immediately after the formation of this candlestick, because it means that buyers are having strength. Let me tell you the reason why I placed today's trade, this nice trade. Let me show you. Now, look at this nice trade. Look at this. I think this is the trade we just took now. Look at it. As I look at the chart, I saw this giant candlestick. This one here, this giant one, is what I just showed you here. Look at, it's engulfing. This one completely engulfed. This one dwarf. This one is a dwarf. This one engulf it. So as I saw this engulfing candle, this particular big one, very giant candlestick, I said, okay. Now I look at the chart. Look at it. This is it, engulfing candlestick. Whenever you see an engulfing candlestick on a zone, those of you who are new, you may not understand what zone is, but you come to understand about this. As I saw this thing 1 hour, I said, wow, the market is a buy. So I asked you guys to place a buy, and we took our profit here. We made small profit. Depend on your loss side, depend on your account side, but there's no how, even if you are using the least loss side, you should have made at least $20 for this particular trade. And indeed, the market moved up to this place before turning back the opposite direction. So this is a clue. This is a good clue that the market may likely go up from here. It has completely engulfed this candlestick. And whenever you see an engulfing candlestick print like this big shadow, if you have read that, what is it called? Naked Forest book, it is also called big shadow. You see that this big shadow completely is bigger than almost all these candlesticks here. All of them is bigger. This is a clue that the market is going up. See, once you understand all these candlestick formations, you won't be asking me for signal. Very, very simple. Now, I place a buy and we made the small profit. So this is the reason why I place that buy. This one may be advanced for people that are new. I don't want to go to the chart for now, but this is purely basic class. So this is another one. It is also called the same engulfing candlestick. See, fast as it is. It opened from here. This was the lowest it got, and it closes here. So if you see something like this, look at the arrow placing. It's a buy. If it appears on a zone, those of you who know what is support and resistance, if this appears on a zone, it means that the market is a buy. Let's go to the next candlestick. This one is called bearish engulfing. Let me show you two examples of bearish engulfing. Look at this bearish engulfing. Look at it here. After this bearish, this one is bigger than this. After this candlestick formation, this was a zone. The market started coming down, and look at how fast the market came down. Engulfing. So be watchful about this candlestick formation. Your clue in the market is to know how it's candlestick that will help you to determine the direction of the market. Once you understand how these candlestick formations, all these candlestick forms, how they look like, and how the way they form, you make money in this trading. It's pure price action, no indicator, no nothing. So this is called, somebody says the color doesn't matter. You place the buy at the close of the candle. Yes, you have to place the buy at the close of the candle. If this is a 1 hour candlestick, you have to wait for the 1 hour candlestick to finish before you can place a buy. You can even put a buy stop, but I didn't use a buy stop. But sometimes you can put a buy stop above this candlestick. Once you put a buy stop, you can take your profit on this zone. This is a little bit advanced for people who are new. So let me just go straight to the basic. So this is how, these are the candlestick formations. Somebody said, which is the best time frame to see the candlestick formation for VS? Well, it depends. Every time frame is okay. If you have discovered your zones, those turning points, what you need to look at now is to bring down your time frame to a lower time frame so that you can have an early entry. If you have discovered a strong support and resistance zone, bring down your time frame closer to maybe 20, 30 minutes or even 15 minutes so that you can have an early entry. If you see something like this on a zone, resistance zone, it is a sell. All right. So that is for candlestick. Let's go to the chart and then talk about time frame. Time frame, candlestick time frame. Now we have talked about the candlestick. Now let's talk about time frame. As a trader, there are different time frames that you can use. We have the 1 hour, we have 15 minutes, and we have up to even 1 day and weekly time frame, even monthly time frame. Now, if you want to be getting in and out of the market, they call these people scalpers. Let me write it down. Scalpers, types of traders. Right, these are types of traders. All right, we have what we call scalpers. Somebody asked in the group that day, I don't know what is called a scalper. Now you can understand what a scalper means. We have what they call scalpers. Scalpers. We have day traders. Day traders. We have the next is called swing traders. Swing traders. We have what they call position traders. Position traders. All right. Now, these traders, we have scalpers, day traders, swing traders, position traders. Now, this is the type of traders that we have. So you are going to determine which type you belong, where is which one you like. You are going to determine that now by yourself. We have scalpers. Scalpers are people who get in and out of trades every single minute. They can be scalping for 30 minutes, 15 minutes, 20 minutes. They will just look at candlestick formation. They jump into the trade and they're out. And those people, they use time frame, candlestick time frame like 5 minutes. All right, they will look at the 5-minute time frame. And when you look at 5-minute time frame, it means that every 5 minutes, every 5 minutes, these candlesticks are forming. This one here is 5 minutes. 5 minutes is currently the 5 minutes now. It's going to end at 7:45. This one was 5 minutes ago. So as a scalper, they look at short time frame like 5 minutes to know when to enter and know when to get out. They are not concerned about long. They are not holding their trades for long. They do scalping, sharp, they are in, sharp, they are out. That is what scalpers they do. And for you to be a scalper, you must be constantly watching your phone to know where the market is going to. Then we also have the people who call day traders. Day traders. All right, day traders. So let me put this type of traders up. As a day trader, you'll be looking at candlestick like 1 hour to make a trading decisions. It means that when you look at 1 hour here, this is 1 hour time frame. It means that every 1 hour a candlestick will be forming. This was 1 hour. This is the current 1 hour. This is 8 o'clock candlestick is forming. This was 7 o'clock candlestick is forming. This is 6 o'clock. So this is how this candlestick form. You can use trading view. This is an app. This is for advanced students, but for those of you are just coming, you are just learning about this now. So for a day trader, you'll be looking at 1 hour candlesticks, 1 hour chart, and maybe 2 hour chart to look at your trading. What that means is that you'll be getting in and out of trade. You'll be getting in and out of trade within a day. You may place a trade, and then you stay till the end of the trading day, and you make sure you're out of the trade. So that is how day traders they trade. They stay in the trade for 1 day. Morning they place their trade. They make sure that before the day runs out, they are out of the market. And they use candlestick like 1 hour, 2 hours. Sometimes they even use 4 hours. But 4 hours is more of a swing trader. The next set of people we have is called swing traders. Swing traders. Where is that? Right top. Guys, are you following? Are you with me? If you're with me, say yes. Are you with me? If you're with me, say yes. Okay. All right. Good. Now we have people that is called good. All right. We have people that are called swing traders. Now, as a swing trader, you'll be looking at candlestick like 4 hours, 1 day, meaning that you can hold your trade for days. You are not concerned about the in and out of market fluctuation every single day. You'll be in a trade for like weeks or days. Swing traders keep trades for days or even weeks. So you look at 1 day candlestick formation. It means that, let me use 1 day now. If you are looking at a 1 day candlestick time frame, rather, it means that every 1 day this candlestick form every single day. This is today's candlestick. This was yesterday's on being Thursday. This was Wednesday. This was Tuesday, and this was Monday. The sizes of the candlestick indicate that that particular day is either the market is going bigger or the market was going smaller. So these things will just be printed. All these things you're seeing back to the left as the previous day's candlestick. If you look at, if I put my cursor here, it will show you November 29. This small one was November 28. This red one was November 27. It means that gold was falling on that day small. It fell small. So the sizes are as a reflection of the movement of the market on that particular day or hour. If you see a very large candlestick for this day, it means that that day price really moved fast, fast, fast. It was a very serious movement. So this is how you can actually uh, choose time frame. And as a new trader, you don't need to use, you don't have to be a scalper, or it should not be. As a new trader, the best thing for you to be is to become a swing trader. Meaning you can look at their trade, look at them for days, all right, be a swing trader, because that scalping is very hot. That means you have to be looking at the computer every second, every minute, and that is not good for a new trader, because you will just be shocked with the market. So I advise you, if you are new, try and be looking at 4 hours, 2 hours daily time frame to look at trades from a higher perspective. And people who trade the higher time frames as a swing traders, they make more money than scalpers. Scalpers just get in and out, they collect more money. But for those who trade the higher time frames, they make big money, because those time frames are being controlled by the financial institutions like the banks and other financial institutions. So that is it for time frame. Now, let's talk about pending orders. Pending orders. What is a pending order? A pending order simply means an order you are telling your broker that you are not ready to take a trade at that particular point in time, that you want the price to move to a particular level before you are going to be in the trade. So what does that mean? For instance, when I say buy stop, let me use that volatility for an example. Now, look at this. In the morning, when I played that buy stop, it was here. I saw this zone. All right, I saw this zone, and I look at it that the price have been turning from here. So I said placing a buy from here is a kind of dangerous. That means price for the past. I look at the 1 hour candlestick. I've discovered that price touches severally, bouncing back, severally bouncing back. It means that here is a resistance zone, though it's a minor zone. So I said, okay, I want to put a buy stop here after that zone, so that in case price break through that zone, it means that it may possibly touch this particular yellow line, which is another zone. So I put my buy order here. This is called buy order, buy stop. Buy stop simply means placing an order above the current market price. I think I have a slide for that. Let me check. Okay. Okay, so look at it. Types of order. We have instant execution. And instant execution simply means that you are going to be in the trade at that time. If you press an instant execution, it means that you are going to place a trade with that current market price. That is what an instant execution is all about. So buy stop, pending orders. Now we have types of pending orders. Pending order is a request made by a trader to a broker to say at which price level a position should be opened or closed. So these are the types of pending orders. We have buy stop. Buy stop means placing an order above the current market price. Buy stop means placing an order above the current market price. I'll show you on the screen of the computer. Buy limit. Buy limit means placing an order below the current market price and expect the market to go up. Okay, let me just illustrate it on the phone, on this thing here. Now, whenever you place a buy stop. This is Euro JPY, and the price is here at the moment. This green is the current market price. As I put my cursor here, the numbers you are seeing on the right, 120,629 is the current price. So now for you to place a buy order, you said, okay, let me come up here. Here the price is too low. It's too cheap. I'm not ready to buy. Come here, I will buy. So you have to now put your cursor here. Before you do this, you have to come to the chart. If you are using a smartphone, you can see trading view on your smartphone. Go to the website or you download the application. Now you just put your price above. Say, yeah, it's too low. Come up, I will buy, because I know that if you come up, you go up and I will make profit. Trading is basically prediction. You predict the movement of the market. You predict the movement of the market. So when I placed a buy stop that time, 2 days, it was yesterday also. It was down here. It was somewhere here. I put a buy stop. The market was down. So I placed a buy stop on this zone. The market actually went up, but it came down again, though it did not hit our stop loss. So whenever you are buying, when you are buying, you put your stop loss down. Oh. Sorry. All right, this is Euro JPY. Now every time frame, whenever you change a time frame, you click a chart. Every time frame will analyze the market in a different way. Every time frame analyze the market in a different way. So once you place a buy stop, you expect the market to go up. So it is called placing an order above the current market. When you are buying, put your buy stop here. All right, your stop loss is going to be here, down, so that in case the price did not go your direction, you can be in the trade. Stop loss is simply, as the name implies, stop loss, stop you from losing money. In case market did not go your direction, with a stop loss, you are protected. So your stop loss is here. What you need to do is just put your cursor here, look at the numbers. Look at the numbers. You see the numbers here, 120.330. That is your stop loss. You come here, this is your entry price. And then you put your take profit. Take profit means that if the price come up, because you're predicting, all right, take profit is here. Now you have your entry point as buy stop. This is your entry price. You put your cursor, look at the numbers you type. Once you type these numbers, you go to your MetaTrader 4 or 5. You just look at, click new order, and then you now type in these numbers. That is how you can trade. That is how you can trade buy stop, placing an order above the current market price and expect the price to come up. So now if you place this order as a buy stop and the price moves to this direction, hit this place, it means that you have made profits. But if the price, instead of moving up, comes down, it touch this place, meaning that you have lost that money for that particular trade. So this is how you can place a buy stop. Now let's talk about buy limit. Buy limit means placing an order below the current market price and expect the market to go up. Buy limit is the opposite of buy stop. Buy limit means placing an order below the current market price and expect the market to go up. Let me explain. Now, in buy stop, we place the price, entry price above the current market. This is the current market price. I will tell the market come up to this point. I will enter the trade. This is the entry price, right? But for a buy limit, you said, okay, this is the price. This is where you are. Now you tell the market to say, okay, come down first. Come down first. Come down first. Come down. Come down. I know that you come down here first before you go up. So you tell the market, come down. So you say, place an order below the current market price. This is the current market price. You say, come down. When you come down, I will buy. Then I expect the market to go up. So that the same way, your stop loss is always down. So that in case this is your stop loss, in case the market did not go your direction, you are always protected. Then your take profit always up. Your stop loss is down, and your take profit is up while your entry is here. That is what buy limit means. Placing an order below the current market price and expect the price to go up. Now let's talk about sell stop. What is a sell stop? Sell stop means placing a sell order below the current market price. Now this time around, let me use volatility as an example. Today, I place an order that is called sell stop. That is called sell stop. And I thank God most guys place that order. That order was this was the candlestick that I saw that I said we should sell and take our profit. So for a sell stop, you have to place an order below. Now this is the price. This blue line is the price now. For a sell stop, you can say, okay, come down. This is the price. You say, come down. If you use this place, I will sell. You are telling the price to come down first. That here the price is too high. You are going to sell if the market comes down. That is what is called sell stop. Then, of course, their stop loss is always up. Their stop loss is up, where the entry above the entry price, while your take profit is down. All right, that is what they call sell stop. Then, what is a sell limit? What is a sell limit? A sell limit. What is a sell limit? Now, look at this place. It's a zone. For those of you who are new, you may not understand what these zones I'm talking about. But sell limit is simply placing an order above the current market price. Placing an order above, let's say this is the current market price. This is the price. You say, okay, come up first. I'm not ready to sell. I know that if you touch here, according to history, you have been touching here and coming down. So I know that when you come here, you come down, because forex is prediction. You predict the movement of the market. So for a sell limit rather, he said place an order above. So you place your order. It is there on the MetaTrader 4 or 5. You will see it. I've already done videos on that. I believe you have watched that video for S101. In that video, I explained in details what these things, how you can place the trade and all that. So this is what sell limit is all about. Place an order above the current market price, and then expect the price to come down, come up here, and then start coming your direction. Of course, your stop loss will be up. In case the market did not go your direction, look at the numbers. Once you put that number, you will see the cursor and you will see the numbers. These are the things you use. Whenever you are placing an order, you must look at your chart first. Those are the numbers they call parameters. These are the parameters you type on the MetaTrader 5 or 4, and then you place the trade. Of course, for a sell, you expect the price to come down. So this down here is your target. This is where you are going to take your profit. So this is how the meaning of sell stop, sell limit. We talked about sell stop, talked about sell limits, talked about buy stop, and we talked about um, buy limits. We've talked about candlesticks also. So if there's anything you want to ask, I want to keep the floor open for questions. So it is time for questions and answers. So if you have any question, please indicate by texting so that I can unmute you so you can talk. Everybody can hear you and we answer your question. Okay, Balogu said I have. Okay, so Balogu, I'm going to unmute you. All right, Mr. Balogu, you can go ahead and talk.
Good evening, sir.
Yeah, good evening.
Good evening, House. My question actually is I just want to ask about is there any news that affect volatility in this, like forex? Do you have any news to watch out for or no? And then the
No,
second question, okay.
okay.
And the second question is regarding the candlestick pattern. You showed us about the golfing, the pin bar. Do you still have other candlestick that we can watch out for? And the last thing I
Yeah,
want to ask is that the zone is very, very important. Can you please maybe you take out some time to show us how you draw your zone perfectly? Because I think I'm still having some issue drawing the zone perfectly, sir. So I don't know when you are going to teach us how to draw the zone perfectly so that we can be able to watch out for candlestick formation on that zones and be able to trade. And then here the last one is on multiple analysis, multiple chart analysis. I don't know how you're going to help us with that, sir.
okay. These your questions are very, very advanced. They are very, very advanced but I'll answer you. But I think
Oh,
we are going
okay.
to have an advanced class on Monday so that we can have draw zones and all that. This is for basic
Okay,
people,
I'm sorry.
and but no
I'm
problem.
I'm really sorry, the OR, so please.
No problem. Well, uh, to draw a zone, no problem. It is very important that you know where these turning points are. That is going to be in our advanced class on Monday. We'll draw these zones correctly, how you can draw them perfectly. And then you also ask that there are other, apart from this pin bar and engulfing candlestick, there are other candlestick formation that you can use. Well, these are the most important, obvious candlestick formations. There are other ones that are individual candlestick. They have different names, but to enter a trade, these are the most important candlestick formation you should be looking at for. They are very, very important. Then the issue of multiple time frame as well. Of course, you can trade with multiple time frame. You can draw your zone with maybe with a daily time frame. Like here now, I drew this zone with uh, higher time frames. One day, one day. Look at I use higher time frame to draw this zone. Look at the turning points. You can see clearly how markets have been turning from this place. Now, when I want to enter the trade, I will want to come back to maybe 1 hour. No. So when so you have to draw your zones with a higher time frame. Then for an early entry, so that your stop loss will not be too big, you can now be entering. You can even use 30-minute time frame and enter. Look at this. If I had entered this trade, but here was still in decision, it was not a clear movement. But if you want to be aggressive, since this place is a turning point, if you want to be aggressive, you can even put your buy stop after this particular small one form. You would have made, if I had seen this thing, but I didn't know, I was not close to my laptop then. If I had seen this particular thing, I would have put my buy stop up here. See these three individual candlesticks, these three small candlesticks, they are individual candlestick formation. But if I had put my buy stop because of this past movement, in the past, yesterday too, it turned here, it got to this point and it turned. So you would have put a buy stop here and then put a stop loss down to this under the zone and then expect the market to come up here. So that is it. So it's a little bit advanced for this class, but that's what you can do, Mr. Balogu. All right, anybody wants to ask any question? Anybody wants to ask? Yes, you know, zone is just too much for this class. This class is not to talk about zones. You're welcome. Okay, Mr. Peter, you have questions to ask? Okay. Blessed, you have questions to okay. Let's hear from Mr. Peter. All right, Mr. Peter,
Hello.
you can. Yeah, Mr. Peter, you can ask your question, sir.
Yeah. Good evening, sir.
Good evening.
Good evening, house. Good evening, house.
Yeah,
Please,
they can hear you.
Yeah, all these sell limits, buy limits, stop loss. I think for me, I'm just speaking as a person, as an individual. I think these things are a little bit confusing, where to put them and where not to put them. I think I would also say that you will be assisting us for time now to be drawing some of these buying limit and sell limit and all these things. At least when we get advanced on the trading, at least we can be doing this by ourselves. That is an appeal. And again, on the entering of, are you hearing me?
Yes, I can hear you.
Yeah. On the entering of this number, in most cases, I see you when you are saying buy or buy now. You say entering number, you write, you say stop loss and take profits. Where are we actually writing this entering number when we are entering a market? Because you've said you've shown us where to take a stop loss and sell limit, or that is it is sell limit or stop loss. But for the entering number, where do we actually write them? Or should we just take notes that this number is just an actual number, but we should take loss, take limits, and take profits? These are my questions for now, sir. Thank you.
Okay. Thank you for that question. Whenever you are sent a pending order, buy limit, buy stop, sell limit, sell stop, it means that you are going to go to your MetaTrader 4 if you are trading Forex. Then if you are trading volatility index, that means you have to go to your volatility index. That is a MetaTrader 5, and you are going to type those numbers. I think I'm going to shoot a video again. Maybe because of this question, I'm going to shoot a video between now and tomorrow. I will explain it on that video. You can be watching out for that video. Practical example of how you can place a trade. Once you see those numbers, you take those numbers to your MetaTrader 4. If you're using a computer, you can use your computer as well and take those trades with your computer. So maybe I will just do an illustration with the computer here because we have a computer right now. Now you can see new order with the computer. You click on the new order. Once you click on the new order, you see instant execution. But if it is a buy stop, just click here. If it is a pending order, which is a buy stop or sell stop, you click here. Once you click here, pending order, they will now ask you which of them. You see have buy stop, okay, buy limit, sell limit, buy stop, sell stop, and all the stuff that they have. You put your price, your stop loss, and then you will just place. These are just optional. You don't need to be wasting your time. Even expiring date and all these ones are just waste of time. But what you are going to be more concerned about is this one. The volume is the lot size. The lot size you can use. This price is the price you are entering. This stop loss is the stop loss amount. Expiring too, you don't need to bother yourself over that. You just click place. You click place now. You will not be in the market, but the market will not execute at that time until it gets to your order price. So that is what buy limit or pending order is all about. Okay, let me look at. So, Mr. Peters, I'm going to shoot a video for this purpose again to explain how you can actually place them with your smartphone. So you're not using a computer. Okay, Mr. Harcourt, from in layman's language, when we are trading volatility, what is it that we are trading? Are they currency, metal, stocks, or what are these volatilities? Mr. Harcourt, this volatility, it is up to now. What I know is that they are hedging stock markets. They are not trading currency, they are just hedging the movement of the stock market. And the volatility indices are not controlled by the news or any interest rate announcement or any government policy announcement or anything. So they are hedging the movement of the stock market. They are not currencies. Forex is currencies, but they are not currencies. Okay, Blessed, you have a question? Yes, Blessed. Okay, Mr. Blessed, you can ask your question.
Okay. Good evening, sir.
Yeah, good evening.
Your explanation to buy stop, buy limit, sell stop, and sell limit are very, very okay. I understand it well. The only one that I did not get the sense it was trying to make is the sell stop. Sell
okay, sell stop.
Yeah, sell on its own is a downward movement already. Now, if I'm to go down a bit to place a sell, probably from the illustration you are giving, you almost touch the support level. You almost touch the support level where, assuming I'm to go down that level to place a sell stop. What sense am I trying to get from there?
Please, come again, please. It was breaking.
What is this? Can you hear me?
Yes.
Yes, I said I'm with particular interest on sell stop. I understood other ones very well. But the sell stop, what I'm saying is, if I place a sell stop, in this case, I'm to go a bit down, isn't it? When the trade gets to a particular point, which is downward in nature, it should trigger a sell.
Yes.
Now, if I place it that low, Is it that it's already on a buy that made me to do such a thing?
Okay. Now,
Is it that
the
the
reason,
trade is already on a buy? Then I have to place a sell stop. Should he get to? Should he head to? That's what I'm trying to get. It's not too clear to me there.
okay, now, what's the meaning of that set stop means is that the reason why we use pending orders to place a trade is this. Now, if you look at this particular candlestick, can you see this red giant candlestick?
Yes.
This was a bearish engulfing, meaning that the price is a down movement. So now, if you put a sell stop here, so that in case instead of the price to come down, the price did not come down. If you go up, you are going to be saved. Because if you put it instant execution, sometimes market may have a very good candlestick, but once you put instant execution, as immediately you put instant execution, market will just surprise you and jump upward. So now, if you put a sell stop here, it means that if the price can move down to this place you have put, that means it's possible that the price can actually come down and you make profit, because it is when the market comes down you make profit.
Okay.
It's just to protect you from not losing some kind of fake out, some kind of trade that will just deceive you as if the market is going down. Just jump enter before you know, bam, it has gone up and you just stop loss.
Okay.
You can imagine that this place, this green button, this green one now, in the morning when I put a buy stop here, I was saying this is a zone, and I expect this price to pass through this zone before I will buy. I put a buy stop here. This was where Austin said his own triggered, which binary made that mistake. It was not us, me. Now, because of that buy stop that I placed, if I had said enter now, instant execution, all of us would have lost out for that trade.
Exactly.
So, but with a buy stop, a pending order, it protects you from losing the money immediately. You can, if the market did not touch here, your money is saved.
Exactly.
All right, that is it.
All right, thank you.
You're welcome. Okay, any other person? The question? Okay, does the candlestick for entry apply for both forex? Of course, every Henry, for every this thing market, whether stock or bond or any market you are trading, those candlestick formations very important. I'll forget this something. Okay, any other question? Yes, Julius, you wanted to say something? Okay, Julius, let me. Hello, Julius.
Hello.
Julius, you can say something now.
Yeah. Good evening, all.
Yeah, good evening.
Yeah, please. My question is what the last person took and the first person. I wanted to remind you that pending order, when we are putting pending order, by placing all those lines, without going through the metaphor to go and fix the value, that it will be difficult for people to get it right, which you actually did. And also the sell order, which you just explained too, was my question, but it's clear now.
Okay.
Yeah.
All right. Okay, Kate, you said you wanted to say something. Okay. All right, Kate, Adego, you can say something now. Hello, Kate. Your mic is on now, Kate. Kate, you can ask now. You said you have a question, but it's advanced. But you can ask. Let us talk about it. Kate, your microphone. Okay, good evening, Kate. Yeah,
Hello,
good
good
evening.
evening, sir.
Yeah,
Yes,
Case,
good
good
evening,
evening.
sir. Can you hear me?
Yes,
Hello,
I
good
can hear
evening, sir.
you.
Can you hear me?
Yes, I
Hello.
can hear you. Kate, go ahead. I can
Well,
hear
can
you.
you hear me? Can you hear me?
Kate, we
Okay.
can
Good
hear you.
evening,
Go
class.
ahead.
So my question is advanced. So, is about risk management. Hello.
Okay,
I
risk
said my
management.
question is risk management. So
Okay.
the calculation of risk management, but like for instance, now if I since like I told you today, I opened my real account with $100 and that yes,
Okay.
that is my question. So if I want to, you told me that my to calculate it, and my question is, will I have to calculate the risk management to get that 0.00 0.01, or I should just use that micro lot size?
Okay. In every trade that you're placing, you are supposed to use that position size calculator to calculate your lot size and your number of your lot size, because if you don't do that, you will be placing a trade with a lot size that you are not supposed to use. Because according to the rule, you don't have to trade not risk more than 3% of your account. So in every trade, you must use that risk management calculator, that position size calculator.
Okay, sir.
Yes, but if your account is $100, most of the time, even if you are risking only 3%, it may not give you. It may still be giving you something below that micro lot because of your account size. It is called nano lot
Okay.
size, but no broker offer that nano lot size. So as for $100 account, I think you should be opening only one position, even if you have an
Okay.
opportunity for two positions. To minimize the risk, be using 0.01, which is micro lot, and be opening one position, or at most two positions. If you want to be somewhat aggressive, two positions at most. Don't open more than that.
Okay, sir.
All right.
Okay, sir. Thank you very much.
You're welcome. Right. So, do we have any other question? Okay. Is there any other question, please? All right. If there is no other question, I want to once again congratulate you and thank you for attending. What you're doing for yourself, you're investing in yourself. This is the highest investment you can make. There is nothing you can do about the economy. The only thing you can do about it is investing in yourself. Keep on, keep on, keep on, keep it on. Don't give up. Read your books every single day. Read your books every single day. This is a skill that will pay you for the rest of your life. But everything will pay out when you make it a study. If you want to become successful, you have to study success. So study it. This is a successful skill. Study it every single day. Trust me, in the next few years, don't expect quick riches. The problem we have is that we want to get rich now, now, now. This is not a get rich quick scheme. It's not a Ponzi scheme that you get rich now, now, now. Forget the get rich quick mentality and work on this thing. You will be surprised how this skill will pay you for the rest of your life. So I wish you happy trading. Okay, what books, Albert? I'm going to send some books for this question. I'm going to send some books tonight on the group so that you can download them, because there are tons of books. There are a lot of books. Every day I read. I read from 5 a.m. I am reading. From 5 a.m. I am reading till 7. Even if I place a trade, after placing that trade in the middle of the night, I will go back to my reading until I will read till 7 a.m. And I will still do it before I sleep in the evening. That's what differentiates readers from not people who don't read. I read every book, Forex, Talk, everything. I read them so that I'll be able to give a better decision. The decisions I am making on trading is not coming from my own brain. No, nobody is like that. You have to study it. You have to learn from others. There are people who are traders. They are professionals. They have put these things on book, how they do it and how they are successful. So I have to make a decision, discipline myself every single day to read these books. That's why I'm giving you trade signals and it works because I have read it over and over. There are books I've been giving you on that group. Naked Forest, that book is a very good book. I have read that book more than 20 times and I am still reading it up to date. I will still read it until 20 years to come. So the key is to be reading every single day. Some of us are working, but spend time in yourself. One of my mentors, Les Brown, he said, if you spend time, Jim Rohn rather, say if you spend time in your job, you will earn a living. But if you invest in yourself, rather, if you invest in your job more, you will earn a living. But if you invest in yourself, you will earn a fortune. So don't let your jobs to not give you time to invest in yourself. If you do that, you're making your job, those people who are your employers, rich, not yourself. So in as much as you are working, that's fine. But spend at least 1 hour each day to learn this skill. A mentor of mine from America, he said, if you can spend extra 1 hour each day studying your chosen career, you become a national expert in that career in 5 years or less. Meaning that if you can spend 1 hour every day learning Forex, either reading or watching a video about Forex every day, 1 hour, I tell you the truth, if you do it for 1 year, 2 years, 3 years, you'll be amazed with the result you see. You can analyze the market. You can go to anywhere. As I am, I can go to any national TV. I can go to CNN and talk about trading because I have read it. Every day I study it. So spend at least 1 hour every day. When I got started, I was crazy. I said, I must know this thing. The first time I was spending like 6 hours every day because I don't have a job. We never like a job. I'm not a job person ever since. So I had all the time. I spent at least 6 hours that first time. But now, as of today, at least I spend an average of 1 hour every day up till now. It's either I am reading or I am watching a video of my mentors or I am teaching. So spend at least 1 hour every day in yourself. It will help you and it will make you become a professional. Do not rely on signals. All of us, most of us are just intended. Where is the signal? I want to trade. Signal. Signal will not make you get better results. Signal will make like imagine yourself begging your father food. That is what signal is all about. If I'm giving you a signal, I'm not doing you any good. Don't rely on signal. Look at how you can learn this skill, analyze it by yourself, and place a trade by yourself. There was a company I was working with. I was learning this skill with those days. A company, and that company sends signals. And because of the signals I was receiving from that company, I never had time to analyze trade by myself. But the day I made a decision that I will not receive any signal from those companies, even if I was paying, I said I will not receive again. I don't want any signal. I want to analyze trade by myself. That was how I broke out of losing traders to become a profitable trader because I put more effort on the education than just rely on signal. So, guys, thank you. I appreciate you. I celebrate you. And I'm so grateful to you guys that you are doing this thing. You are doing something that will pay you for the rest of your life. So I wish you happy trading. If there is any signal, of course, I will drop it. But whenever a signal did not go your way, sometimes we will lose. This trading is more of emotion than skill. 80% emotions, 20% skill. Sometimes we are so angry because I lost my money. If you are not ready to lose money, then you shouldn't be trading. Do demo. This trading is loss and gain. You lose sometimes. Sometimes straight 1 week you are losing. That is the game. But if you are someone that if you lose one money, you begin to be angry with the person that sends signal, you begin to resent, you begin to ask questions, call, why am I going to lose this money? Then trading is not for you. You have to do something different from trading. So be ready. Sometimes trade may not go your way. The day it didn't go your way, still thank God for that day and try again tomorrow. Trust me, if you don't give up, you win. So good night, everybody.